Ladies and gentlemen, welcome to the third episode of Investing with the Boys, the D Wade episode. We made it, number 3. We got our boys Logical Thesis. We got our boy Sam. This is gonna be a great episode. We're gonna talk about how the AI arms race, East versus West. What does DeepSeek mean? Is this semiconductor trade over with, or is it a pause? What's happening to big tech? Their earnings reaction isn't that great. There's a ton to dig into. Shout out to our sponsors, Osprey Funds. Go check them out at ospreyfunds.io. Let's get the ball rolling. Logical. Which one of those topics do you want to talk about first? Should we talk about DeepSeek? I feel like that's something that's the biggest of topics.
Yeah, I mean, there's two really big topics this week, Monday and Wednesday. Monday being DeepSeek just absolutely threw the market in a tantrum. So many stocks down 20, 30%. NVIDIA, the largest company, down $500 billion of market cap. I mean, that's got to be the story of the week for sure. And I think obviously we'll get into it later, but what was said on the Microsoft and Meta earnings. But DeepSeek, man, I mean, came out, basically said, we have a better LLM than anyone in America. Just kind of came up out of nowhere. Funny thing is, it was actually released last week, but it didn't really make buzz until Sunday night. That's when everyone started getting the jitters, getting a little bit of fears. You're starting to see, a lot of stocks gapping down and overnight. I personally took some shorts overnight. They worked out by Monday morning, but it was tough to say. It was crazy, man. I mean,
that was pretty wild.
Is there validity to what they're saying? I think so. I mean, look, there's a lot of people digging up, they used NVIDIA GPUs in China, even though they're not supposed to. The revenues of NVIDIA going to Singapore, they're investigating that now. Did that get backdoor? Like, was there some back channels that basically got their way to China? Were they accessing open AI models to improve their model? Look, that all might be true, but still, they created a better AI model, and that has real implications for all the investment that's been going on in America. How were they able to do that? And even if they used, NVIDIA GPUs, were they using a smaller volume of them? I don't know. What's your guys' take on it?
Yeah, I want first off, Sam's gonna have a great take on this. So I want to go before he does, because I'm gonna do like the high level before he gets in real nitty gritty. All right, so like what Logical was mentioning on Sunday night, I woke up Monday morning. We both were up since 2 a.m. our time on Sunday. We couldn't go back to sleep. When QQQ is down 5%, I'm like, what's happening? I got to dig deeper. And the more I dug into it, I was like, why is software selling off? This is wild. Anything AI related was getting sold off from this news, but software should not be. And the metaphor I've been using, which I think is really applicable for the listeners, and that's why I want to go before Sam was, let's just say in a hypothetical scenario, in the consumer lives, if gas became cheaper, the fuel for all the cars, if gas became significantly cheaper, do you think that there's going to be more or less cars on the road? There's going to be a significant amount more cars on the road. Getting from point A to point B will get drastically cheaper, so that more people are going to be able to afford to buy a car. So the cars are going to 5x, 10x. The cars in this metaphor is software. These AI tools are becoming so... DeepSeek revealed a proof of concept that essentially made all the training data a lot more cost effective, which is going to result in a gold rush, in my opinion, for software applications. So essentially what I'm referencing also during the COVID times, like e-commerce was always going to be an inevitability. However, COVID accelerated that adoption years, maybe decades. I think the DeepSeek playbook reveal accelerated the inevitability of software applications, the crown jewel of this era, from happening maybe later this year to happening in months. And I think that's why I was shocked to see it. Snowflake was down 6%, MongoDB, Cloudflare, everything software related was down significantly. I was like, that's a misconception. And as soon as the market, I scooped up some shares trade, I was like, I should have done more, but I was like, this is a great opportunity in my opinion. all the software names gapped up while all the semiconductor names got new low. So Sam, I gave the very 13-year-old explanation of what occurred. You tell us the actual facts.
Yeah, I mean, to be honest, your guess is as good as mine as to what happened. I mean, we're all kind of basing our theories that are being biased based on price action, right? I mean, at the end of the day, the market knows actually what happened. Us as investors and traders, we don't really know what happened. We're just kind of going with the flow of the market and what our terms, our beliefs, and then we use the market price action as a bias and confirmation bias as to tell whether we are actually right or not. But my opinion, I mean, first to say, I slept like a freaking baby on Sunday night, dude. I woke up at like 7 o'clock.
Money don't sleep. Money don't sleep, Sam.
Honestly, like I woke up at 7 o'clock and it wasn't because like, you know, I had to wake up. Like, of course I gotta wake up for her. I was actually upset because I woke up late and my kids were late for school. But anyways, the thing was for me is that Sunday I did see the news regarding DeepSeek and the release from Scale AI of they have 2 AI models that came out. Well, not that came out. They've actually been out for a while, but 2 AI models in question. There's DeepSeek V3, which is kind of like the Chat GPT 4, and there's DeepSeek R1, which is kind of like the Strawberry or the O1, like the really smart AI that's OpenAI released. And that one requires a lot more compute. It's a lot more queries and so on. But I think the big thing that really stood out about this entire thing that was a surprise to the entire market was we are not compute constrained anymore. What was the entire theory before DeepSeek came out with their benchmark testing and also their budget for the entire thing of $6 million? The theory was that we are compute constrained. Jensen Huang, all the time, we are compute constrained. Lisa Su said that thing. Every single CEO said that. Even Satya Nadella, Andy Jassy, and so on, we are compute constrained. And now DeepSeek comes out and says, with the same underperforming and underclock compute with the H800s and the H100s, basically, it's basically the current line of NVIDIA, what they have for the GPUs, but it's underclocked, very clocked and restricted down on a hardware basis that they can't utilize that full compute potential. They were able to benchmark, basically run tests, performance tests against their own applications and queries at a faster and more efficient rate than what we are able to do with ours. So when that news came out, I think that was like the big spook for the entire market. And that's probably the reason why companies like NVIDIA and a lot of the semiconductor hardware data center companies got hit the hardest as follow through throughout the entire day. Because you guys even saw it. Like I remember seeing on Sunday night in overnight trading in Robinhood, Snowflake was like in the 150s. Right? It was 150, well, whatever. MongoDB was down a lot. Every single stock composite thing was down a lot. The Qs were down to like 505 pre-market, which would be like 5% down. It was brutal, right? Everyone thought like this is it. China's going to take over all the stuff, right? The whole AI wave is over. And then what we saw throughout the day, not just through the price action, but as news was continuing to come to surface, was that yes, we're not compute constrained, which means that NVIDIA's GPUs are no longer going to be as high in demand as expected because the demand was based on the idea that we need more GPUs, we need more GPUs, we need more GPUs. But as people started to look into DeepSeek and started to do the research and everything, and as, you know, even Mark Zuckerberg, he put freaking DeepSeek in like 24 hours turnaround on as part of the models available, and so did pretty much every single hyperscaler available out there. What came out was that it's not that we're compute constrained, we're actually network throughput constrained, right? So you like I actually said this metaphor earlier to you guys, Shy and Logical, is that if you take, like you said, the car in terms of the metaphor for cars going from point A to point B, you have the cars, which is the software, which in this case is the data, right? The data goes from point A to point B. And then point A is like, let's say one GPU and point B is another GPU, right? And they both communicate each other over you know, it could be like multiple types of channels or highways, right? And the highways that we have, they're really good top-notch highways, but it's kind of like the 4 or 5 if you live in LA where it constantly needs maintenance all the time, right? So our highways, they're being constantly paved all the time, but the way China did it was that their highways were like newly paved and probably like the best concrete you could think of. And that's kind of what they're focused on. But instead of repaving the highway, they thought about different shortcuts and ways that they can reduce the amount of queries that are ran instead of the whole 100%. They're only running 5% of the queries. And on top of that, they're leveraging all the lanes in the highways equally versus like just the HOV or the high occupancy vehicle lane and so on. Like they're utilizing all the highways on equal data throughput. And then they're also running 95% less queries. So they're able to do the same thing way faster than we did with the same amount or less compute. Like no one knows what the answer was. $6 million, like get the hell out of here is more than that. But that wasn't the point.
That's background noise. Exactly.
That wasn't the point. The point was that everyone was looking at the wrong thing. So then now you saw from now until the end of the day, today's Thursday, IGV has totally outperformed SMH this whole week, right? And then on top of that, NVIDIA is pretty much close to where it was when it bottomed on Monday. And then Snowflake is trading near its 52-week highs. Same thing with a lot of software stocks. Even today, like we're seeing like software stocks ripping after hours on the face of Atlassian or team releasing its earnings. And you and I both know, dude, Atlassian is not like an all-star AI play. Like it's at its 52-week highs after hours. Like, why is this happening? I think it is because we are no longer compute constrained. We need to work on faster data throughput. And because of the fact that we have more money to spend on data and network throughput versus just compute, that's going to go towards software.
No, you nailed it. And I think the way the TLDR of that essentially is Google Maps versus Waze. Waze got introduced after Google Maps, Apple Maps, where if you guys aren't familiar with the Waze app, essentially find shortcuts throughout from point A to point B destination, like all those side streets, those weird left turns that are super stressful and two-way traffics, whatever it might be. They found an alternative route that was far quicker. That's what DeepSeek is. That's what DeepSeek revealed. So I do think the metaphor as well, I want to call out before I do want to get into big tech app, like what the implications are for big tech. Cause I think that's actually being underrated a bit right now, but quantum, I think this pushes back the timeline for quantum a bit. I think the computational demand isn't going to be as severe in the near term due to this reveal. And that pushes the timeline from what I thought was going to be 3 to 5 years to maybe 10. And I think right now for the near term, next couple of years, it might be a pure government play, whatever the government does for quantum. And you saw the initiative, Stargate initiative, like there's going to be a ton of deal flow towards AI infrastructure, American AI. There's going to be quantum AI, American quantum, and there's going to be American space. Like there's going to be a ton of deal flow going there. But I think the pull forward thematic got delayed a bit after this news for quantum. But do you have something to say about that, Logical?
Yeah, well, not about quantum, but just talking about this DeepSeek stuff. Here's another thing to consider too: is like, okay, there's two things about this which is really interesting. One, I mean, China and China tech has been left for dead. This one kind of really hit US tech, from left field, and 2 days later, you get the Alibaba Qwen model, which is also outperforming DeepSeek. These guys are just firing off at like full cylinders. So, I mean, look, I don't mean to toot our own horns, but like Shai, you've been talking about the software trade. We've all been saying that that's kind of the next phase for AI after the hardware plays. So I think we've kind of nailed that so far. It's playing out pretty well. Last week we talked about China, and I was mentioning how, a lot of these charts look really good. And sometimes I'm telling you, like, the technicals on something really does make you feel like, is this holding up? Is there something going on under the surface? And all you needed was that one little catalyst, one positive shift in sentiment. I mean, go look at the KWeb chart, which is their QQQ. That thing was up 4% today, an entire index. I mean, that's an insane move. Imagine the QQQ was up 4% in one day. I mean, that's huge. And that's after the big run it's had. It's already up like 15%. It's definitely outperforming the Qs and SPY. You have Alibaba. After that Qwen model was released, and we all know that Alibaba is very cheap, does it mean that, that stock's ever going to trade at the multiples of US tech? Absolutely not. But I mean, that thing's trading at like 10 PE or less. You get a big catalyst like the Qwen model, and all of a sudden it's off to the races. I bought that thing right after it gapped up. I swapped some of my KWeb for BABA because I felt like, a little bit more beta to get that play. I bought it at 95 after it gapped up. Stock's at 102 right now, and it's having a huge week. I mean, that candle is like a god candle, and it is at the highs of that week, and it's on huge volume. So maybe we're starting to see a shift towards China tech. You know, it's holding up really well. And what's really, really interesting, because we're talking about how AI is going to continue to develop and how we're going to keep pushing this race forward. You guys talk about, you know, cheaper gas means more cars. Well, now not only that, but now you started off the podcast by saying East versus West. It's so true. I mean, we haven't probably seen something like this since US versus Russia in the space race, and that got us to the moon. So where does this take us? And so I'm just thinking, like, is it going to be tit for tat? Like, are we just going to be in the next few years of just constant innovation, of just like trying to beat, you know, the other guys, and it's going to push us? And so the Stargate project maybe is just the tip of the iceberg of how much we're going to be investing into this. And now, you know, obviously things have changed a little bit with where we want to spend that money, but we all agree that that money will be spent. There will be different kinds of winners maybe moving forward. And I know you guys talk about ALAB and MRVL technologies, and you know, maybe Sam can talk a little bit more about that. I know you both are long ALAB, but just the thought of like upgrading your current data centers, you know, upgrading your current infrastructure rather than building more infrastructure out, that could be a theme. And different players are, you know, for the next phase, like maybe some of these AI energy plays or AI liquid coolant plays or whatever it is, server plays, maybe that is going to start taking a back seat. And we, you know, once we get to the mega cap tech topics, we can kind of talk about that a little bit. Last point on the DeepSeek before I hand it over to you guys to talk more about chips. I think a big part about this too is that it's an open source model. I mean, other players are starting to use them now. They're trying to incorporate them. Think about Meta, their Llama open source model. I mean, they're the first to really pioneer that kind of going down that road. They just released that they had 700 million MAUs. I mean, that's huge. And now you have DeepSeek, which is potentially a better model. Is that going to put a dent in what Meta saw as, you know, the owner of AI and LLMs moving forward? I don't know. What do you guys think?
So for Meta, I think first off, I think Meta's Llama strategy was identical to their social media strategy. Just initially, just make open source, just gain as much market share as possible. We all agreed on this pod that LLM race is a race to the bottom. Like it's going to closed source is not going to be a thing. It's going to be open source. So Meta has that advantage, and I do think their AI strategy did get validated by DeepSeek's breakthrough, and it's going to allow it to refine its own Llama models at a lower cost. Like that's the beauty of the open source nature of DeepSeek. Like Gemini, OpenAI, Llama, they're all going to utilize what we all learn in that playbook to lower their costs for their models. And Meta doesn't have the same issue as the Microsoft or Google has because they created from an open source from the beginning. And they're going to still maintain their competitive edge through the ridiculous amount of data scale that they have and then platform integration. So this lower trading cost is going to accelerate their ability essentially to embed AI into their ecosystem, drive engagement, ad monetization. So it's uber bullish Meta. It's uber bearish for Google. I am a big Google bear now. I think
Really?
AI I'll tell you why.
Great take.
Sam,
I love that take.
I want you to rebuttal me what I'm about to say. So I do think AI commoditization is going to pressure Google's pricing power and increase the risk of alternative AI-driven search models. I think that's their search monopoly is going to become even more of a risk, and that's going to essentially be a read-through for their core ad business as being a risk. So I do think Gemini can integrate, again, these new advancements that Playbook has integrated, but I do think this is an existential threat to search, and that's going to be a long-term overhang. And I also think the lower AI infrastructure cost is going to benefit Google Cloud. It's also going to benefit AWS. It's going to benefit Azure, but the declining hardware requirements is going to significantly weaken Google's TPU advantage. And again, search is just going to be a key battleground for Google, but I think this democratization of AI tools is going to disrupt their search monopoly because it won't take that much of an inference cost now to create a competing product. And I want to hear your take on that, Sam. But I think their TPU risk is severe, and their search is going to be a key battleground.
So the whole point of the TPU processing was to create a cheaper alternative for the GCP clients to get similar results. It's kind of like how Amazon has the Trainium and the Inferinium proprietary chips, right? Google's kind of doing the same thing too, but we already know that Google actually utilizes it on its own end with its search models, with Claude and all of the LLMs that it makes available to the public and even charges them for. I don't think that it would actually be competitive with it, or maybe it might, but I think it might be too early to tell. You did touch on its search business, though. I somewhat agree. There's a reason why Google isn't a big position of mine, for that matter, because of the fact that, yes, they are in the search business, and you get a lot of companies that are figuring out the ad tech, and they're able to take market share as far as not advertising on Google, because Google's a walled garden, right? Like they run the demand side and the sell side when it comes to their own advertising, right? So they kind of have a moat in that when it comes to Google advertising. But then they also are diversified across many different verticals, and then they're kind of running with the self-driving Waymo service right now, right? So dude, this company prints cash. Like, it's so hard to
until they don't though.
Until they don't. But like, they're $2 trillion+ company, and they will figure out a way, especially in this day and age. Like, if they were to lose the crown, which they don't even have the crown to begin with, but if it was actually bearish for Google, which, and don't get me wrong, dude, the bear case for Google has been reiterated many times across Google. You look at that freaking chart, dude. It goes through ups and downs based on the sentiment, and nothing's really changed the whole time.
Well,
you know,
this has changed though. The zero cost inference.
That's what people said before.
No, but it reveals a play
them over. Yeah.
No, but I mean, you're right. You're right. I am poking holes. Yeah, logical.
I have an opinion on Google. I'm not necessarily bearish. I don't know. I don't know why you would own Google.
Yeah.
I mean, look.
All right, let's gang up on Sam. Let's do it. 2-on-1.
No.
Come at me, bro. Sell all your stuff. Nah, just kidding around.
I've been talking about Google for a while. I just don't see a lot to get excited about for that business. That said, if you go look at the chart right now, I just pulled it up. It is at all-time highs. It actually just broke out. I mean, look, does this thing go higher? Probably. Do I want to own it? No, I don't. And here's a couple reasons. Shai mentions a good point. It's the search, right? It's 90%. They have 90% market share in search. That is their bread and butter. So they only have market share to lose, in my view. They don't have market share to gain there. So we already know that they've kind of already expanded there. From the cloud business, sure, they're going to continue to grow. Maybe they're the fastest grower, but from a scale size, they lose to Azure and AWS for sure. You think from the LLM perspective, which they should have been leading, they really haven't been. I don't think Gemini people consider it to be that. Not that you really want to be competitive in the LLM business. But then you think about there's a couple other things going on. They just had the DOJ antitrust trial around search. The DOJ, again, under Lena Khan, who no longer works there, but she asked them to basically divest from Google Chrome, which obviously they will appeal, and I don't think that'll go through. But they're under attack, and they still have the DOJ trial out there for the ad tech antitrust trial. And honestly, there's a good chance that I've read a lot of great papers on that. There's a good chance they lose that trial as well, and it will be an unfavorable ruling for them. So there's a reason why Google trades at such a low multiple. In my view, and again, I think that I know Meta started announcing a dividend as well, and Meta's been a lot better of a growth stock in my view. It doesn't have as many bear cases, honestly. Google does, but I just think that once these companies start announcing dividends, it's like, are we going X growth now? Are these going to be the companies, like a lot of these mega cap tech, are they just becoming like, I don't know, run of the mill? We just saw Apple's report today, underwhelming, trades at a high multiple. Maybe it's because they pay a dividend. They're able to, EPS, they're able to engineer their EPS through buybacks. I mean, yes, these businesses are cash cows, and they might be, they're clearly stalwarts at this point. They're no longer the businesses they once were at smaller sizes. That's all I'll say.
Yeah.
Again, like even if it goes from 90 to 70%, like that's still amazing, but that difference, that's huge. That's a 25% loss in their cash cow. That's all their profits from their is that. So that's why it's like, but also I just think when there's anything this revolutionary like AI is, there's going to be disruption from names that you would never anticipate ever.
Yeah.
That's why we're trying to like offer both sides of the arguments.
Oh, I mean, I think sorry, just one last thought on this is like OpenAI, when they came out with the ChatGPT and people are like, oh, people are going to replace, Google search with ChatGPT. I'll tell you, I didn't do that. And now I do that. But I mean, we knew
I do that now too.
the costs of running a ChatGPT query is like, I think when I read this, like back when ChatGPT came out, it was like 6 cents or something. That's what it cost them from compute. And for a Google search, it cost them, fractions of a penny. So that way it was a lot more profitable for them for their ads business. But now, so I was always like, ChatGPT has no chance in terms of profitability. But now if compute gets cheaper, then is the argument going to come back around? That's a good question.
Yeah, I mean, I totally see where you're coming from. A lot. So Shai was talking about TPUs. That's one where it's like, I don't know if that's going to be the case yet. It's kind of too early to tell with that. But, if we're centering the conversation around Google search and is the 90%, around 90% of its revenue going to get hit? Right now, Google search is growing at about 12% year over year for that sector. It is a high margin business as well. So a lot of its net income does come from there and free cash flow. But I still think that it might be too early to tell what's actually going to happen, right? Sentiment has certainly flipped. And obviously, sentiment is going to dictate where price is going to go no matter what. But at the end of the day, like long-term wise, like, do we really think that one of the magnificent 7 companies that basically grew from just being one business to having wide moats and hands in multiple businesses around the entire, it was very successful business around the entire world. Let's not forget about GCP. GCP is not even close to 90%. It's probably more like 15, 20% of its revenue, but that is growing around 35% annually, year over year on a quarterly basis. And that's a very high margin business. And we're talking about the third, no, not the third largest thing. Oracle is the third largest, but we're talking about one of the 4 largest hyperscalers in the entire world. You cannot discount that. Like, it's too early to discount Google as a whole based on that thesis. The fact that because of the search business getting attacked, it's possible Google's days might be outnumbered. But if we're talking about the leaders, I don't know. If you really pegged me in a corner as far as which mega cap is going to be leader, first of all, I didn't think Apple was going to be one of them. I did not think Apple was going to be the largest mega cap today, the largest company in the world today. I didn't think that was going to happen. But Google is one of the few mega cap companies that are near its all-time high after the disaster we saw on Monday. And in fact, one of the outperformers in mega cap, even on Tuesday after Monday. Like, something's going on here. Like, the market is not seeing this. The market's not agreeing with this. It's the whole thing.
I chalk that up to they're probably more exposed to software side of things, but also the valuation is just a lot more digestible, I think, than the other Mag 7.
Yeah, well, historically, they never have the greatest valuation comparatively to the other mega caps. They're usually one of the cheapest ones. And historically, Meta was that. But now look where Meta's at. I'm not saying Google's going to have a Meta moment, but I'm saying that there's, especially with the amount of buybacks Google does, and it offers a dividend as of last year. This is going to be another Apple soon.
Here's my thought too, though. Like,
it's not going to matter.
The buyback argument, whenever a company is like near their highs and they're buying back stock, I feel like, is there not a better use of that capital? I just wonder. Right. And so that makes me think this company might.
Well, there isn't. That's why they're buying back their stock.
Exactly. So do I want to be invested in a company that their best form of allocation is to buy their stock near all-time highs? I want to see a company that's really going to dig down when their stock is at lows and just bid that thing up. So for me, I don't know. One thing I will say before we move on to like Meta and Microsoft, because they had the big earnings, I just want to talk about Amazon being kind of, in my view, the best Mag 7, and it is my largest position. So I'm a little bit talking my book, but
all of our large. Well, actually, I don't know if it's Shai's largest position.
Probably
top five.
But look, here's my thought. We can talk about how Google search can get disrupted, but the difference between Amazon is that its moat in the consumer business is impenetrable. It is a physical logistics moat that you cannot replicate anymore. I mean, they got logistics down so much that they have a partnership with Shopify. Shopify went to go down their own road of building out their own logistics center. And they basically halfway through just threw in the towel and said, you know what, we could just do pay with Amazon.
Did you hear the UPS news today?
No, I didn't. What was it?
UPS waved the white flag. Essentially,
yep.
Well, there
what
you
was
go.
the exact term?
It's like half of their staff they're going to cut.
It's the truth,
they're
man.
slashing. We'll slash Amazon's package volume by 50%. So Amazon isn't outsourcing; it's owning the supply chain, speed, efficiency.
They just got stronger. They just got stronger. I mean, that is a monopoly. That is insane. So to me,
who has that in their cards?
And look,
who
here's the thing, right?
That?
We think about Amazon too as like, okay, the consumer company, that's where they drive a lot of revenue, but that's not where they're getting a lot of their high margin profits. But they use that business to always funneled back into R&D and over time built that AWS business. That's what Amazon's been great at, has been reinvesting into growth opportunities. You don't see them paying a dividend, thank God. You don't see them really buying back stock. They don't do that. They'd rather go for moonshots. And so I appreciate that in the business. And all of a sudden, overnight, the funny part about Amazon's consumer business, you think, oh, they don't really make a lot of money there. Well, let's think about the Costco model. The reason why Costco is able to sell things so cheap and it's one of the reasons it's one of the best companies, is because they have the 100% gross margin on their membership fees. So, there's like 200 million Prime members. That's an insane amount. It's like $150 a year for that. And that's how they're able to offer other things. And then on top of that, to be a seller on Amazon is a big deal, right? People have create their entire businesses around selling on Amazon. So they rely on Amazon. And if they want to sell on Amazon, then they're going to have to pay ads on Amazon. And Amazon is now the third largest ad business in the world. And on top of that, they have all the data in the world about consumers and what they spend and what they're buying. And they can easily just figure out, hey, what's the highest volume items that we can make for cheap? And then let's make our own first party items. I mean, it is just the greatest ecosystem ever.
It's not fair. It's not fair.
It's not fair.
It's also like, you even talk about one thing they're about to get it. There's one industry they're about to go into that's going to affect one of your holdings, Sam. We won't get into that. That's another episode. Hims and Her Health has no chance against Amazon.
Interesting.
Like
that's
the
different
healthcare. That's another episode. But like the healthcare space, like Amazon even gone into. But let's go back to Amazon, because I think going back on like why we're also bullish on software, especially once the DeepSeek news came to light, compute demands are going to go through the roof once AI tools become cheap. And AWS is the king of compute. I don't care what anyone says. Like, they are by far the tier one player. Azure has made up numbers, in my opinion. That's insensual. I don't know what's OpenAI related, what's pure. It's messy. Google Cloud has had the most impressive back-to-back quarters, in my opinion, for their GCP. Like, I'm like, whoa, this is like gaining momentum.
Yeah,
smallest, but I think GCP and U2, if they're spin out of Google, like they would be significantly higher. But that's beside the point. Let's talk Amazon. So I do think DeepSeek, what's the implications on Amazon? I do think like AWS is obviously positioned to dominate the infrastructure for AI. And that's going to be beneficial once all these AI tools get blown up in a good way. Multiple force multiplier. I will say the rise of efficient open source drives greater cloud consumption. DigitalOcean is going to benefit as well in SMBs. Their GPU rental is going to take somewhat of a hit. However, I do think the increased demand on the data storage, processing, and again, the Gen AI applications are going to be so freaking high for compute demand that Google is just set up perfectly. And I'm not even talking about the physical AI component of it, where Jensen a couple weeks ago was like, that's the next derivative of AI. It's going to be really bullish. Amazon is quietly leading logistics robotics. They have 750,000 robots in their warehouses right now. Their e-commerce business, like if you bought Amazon right now, their e-commerce business is essentially free. This is purely AWS. Like that's the multiple that AWS has, is what Amazon's trading at right now at 220, 230. E-commerce side is free because, again, they're investing heavily in the logistics. It's a low gross margin side of their business. They could care less about it. That's just a way to get a ton of Prime membership across the whole world, convenience, etc. Once robotics comes to full scale, that's going to be a massive margin expansion opportunity on the e-commerce side. And now their e-commerce business will catch a bid. But yeah, Sam, I'm going to let you talk about the Amazon piece. But I was like, I think they're a leader in robotics. Like everyone talks about, Tesla through Optimus, NVIDIA through their CUDA platform,
and Doril they're thinking about, but it's like we have one of the best robotics companies already out there on the market.
And I feel like that's not accentuated enough when it comes to Amazon. Like it's just the robotic tailwind when it comes to Amazon is just underestimated in my opinion.
They benefit the most from it.
Yeah, they benefit the most from it.
Right.
They're going to reduce costs ridiculously, and they're going to they could probably get to the point where they could start doing some sort of third-party rental of their warehouses to other people. But I'm obviously going to keep it out. Like there's a lot more potential. But
wait, one last thought before we go to the next topic, just on Amazon real quick, because we are so bullish on them. People were selling that stock off. I mean, it was down 56% in 2022. what they had done when COVID came around, and obviously, like you were saying earlier, Shai, like e-commerce basically, propelled 5-10 years ahead of where they should have been due to COVID and everyone ordering things from home. They pulled forward 4 or 5 years of CapEx spend, growth CapEx spend. So that was showing up in their cash flow numbers as deeply negative free cash flows. People were dunking on Twitter with these ridiculous takes of like, you're buying this company, it's so expensive. It's like, dude, that's growth CapEx, not maintenance CapEx. They pulled forward years of demand. And now for the next few years, they're going to be printing cash. So now it trades at one of its cheapest multiples. We're seeing extreme levels of growth on the bottom line. So yeah, I mean, I'll pass to Sam after that, but that's all I want to say.
Yeah, no, I mean, 2020 to 2022 was like Amazon in the mid 2000s, the first decade when people were like, people thought Amazon was going to go out of business. Like Amazon goes through like these ultimate crazy CapEx cycles, right? And we're in like a general CapEx cycle when it comes to a lot of these mega caps in terms of building data infrastructure. But with Amazon, like we know what they're like as investors, we knew what they were doing for those 2 years. They were building out their entire infrastructure when it comes to the logistics backbone of their entire e-commerce platform. And that was a lot of money. And they people thought Amazon was going to die. I'm not die, but like they thought they were going to lose their edge because they were just spending all the money.
They thought they were Intel, essentially. They thought they're the next Intel. Like
it got really bad. And, like, don't get me wrong, though, like the whole market was down during 22. So it's like, who would have known, that it was going to come back so hard? But I think that kind of came to fruition when Amazon had that earnings with and Andy Jassy. I think it was like late 2023, where Amazon went from like the 110s to just like 140 overnight after that earnings, but like people literally thought it was over. But anyways, before we jump,
one last comment on this, just because I think it's really important for people who are interested in investing books and whatnot. There's a book by Chris Mayer called 100 Baggers. Fantastic book. He goes through and studies all the 100 baggers, looks at what size market cap they were, and then goes through a few case studies, one of them being Amazon. And he talks about how people were, back in the day, 10, 20 years ago, right? Basically saying, this company is unprofitable. Why would you ever invest in it? But if you were to actually back out their R&D spend, which they were constantly reinvesting into the business, because that's been basically like the backbone and the spirit of that company has been to reinvest into growth. If you were to back out that R&D, they would have had 10% operating margins from the get-go. So that was a very profitable business if they wanted to turn it on, but they just never did. So they reinvested in for growth and turned into a 100 bagger. So there you go.
Yeah. And today, like, honestly, if Amazon announced they're releasing a dividend, I think the stock would go down. I think people would look at that and they'd be like, this is basically Amazon saying we have no idea what to invest in terms of capital and whatever ROI. Like, we have no idea what to do with this money, so therefore we're going to pay our shareholders back. And that's Amazon's that's Amazon. One of Amazon's pauses right now is that they're a freaking almost a $3 trillion company, and they're still growing this quick. Like, obviously Meta is one of them too, but it's like, please don't do a dividend. Like, I remember seeing like one time on Twitter, like someone was saying like, oh, I hope Amazon does like a buyback or something. I'm like, no, I hope they don't do a buyback.
Yeah, exactly.
Yeah. But anyways, before we go on, just want to do a shout out to our sponsor, Osprey Funds. If you're into crypto and looking for ways to add it to your IRA or stock brokerage, check out our partners at Osprey. They offer easy access to crypto through traditional investment accounts, and there's no need for wallets or exchanges. They have a Solana Trust ETF, or sorry, not ETF, a Solana Trust, ticker symbol OSOL, and Binance Coin Trust, OBNB, that lets you get exposure to these assets from your brokerage or even your IRA. And just a heads up, guys, this is just to explore your options. You have to do your own due diligence and do your own research. Go ahead and check out their website at ospreyfunds.io. That's OSPREYFUNDS.io. And of course, not financial advice. All right, so let's go ahead to the next topic, guys. What are we talking about next?
We got to talk about Meta and Microsoft earnings, because that's insane. I think the Microsoft one is a lot more, I think, important for what the market is. So, I mean, maybe we could just start there and then we could talk about Meta after. But Shai, you want to kick us off?
Yeah, I mean, Microsoft, I think they face they face a cloud headwind. I think that's like what it is. Why the stock's pulling back 5%. I think. Listen, their AI dominance is undeniable. We can all agree on that. I just think 13 billion. I think they report like 13 or 14 billion in their AI driven revenue, like blew way past expectations. But Azure's 31% growth was actually on the lower end of expectations. I think management walked back to its prior forecast of a second half acceleration, which spooked a lot of investors. AI is booming, but why is their traditional cloud workload slowing? That's raising some questions about how quickly can AI demand offset that broader Azure deceleration? That's one component. Part two is also CapEx is climbing 100 billion a year runway. So with the burden of proof now is on Microsoft to show, can AI justify this level of investments when their cloud workloads are slowing? And there wasn't really that good an explanation on the conference call to justify it. And now, after DeepSeek's like playbook reveal, showing that open source was the way to go to LLMs,
closed source,
all the billions of investments that Microsoft made in the closed source for OpenAI looks like a fool's errand. It doesn't look good to be a Microsoft investor, and they have a premium valuation. Like the PG ratio, I love to use, which is Peter Lynch's favorite metric to use, especially for mature tech companies. Under one. Yeah, under a PEG ratio. Under 1.0 is undervalued. Above a 2.0 is overvalued.
Yeah.
Microsoft's at 3. Apple's
That's
at 3.
insane. I did not know that. Apple's probably really bad too, I'd imagine.
But Microsoft, like if there's slowing cloud demand or cloud workloads, they should return back the mean. I'm not saying they're going to go down 30 or 40%. I think they're range bound for years. I don't think they're going to catch a bid. And it's began last summer. So that stock, but Sam, Logical, I know which one you guys want to jump on first to add your point on Microsoft, but I would not touch this with a 10-foot pole.
Yeah. So honestly, that worried me. I think we were talking about this, Shy, where it's like, is this a Microsoft thing or is this like an overall hyperscaler issue with cloud not reaccelerating, which is what we saw last quarter? The trifecta, Google, GCP, Microsoft Azure, AWS, Amazon, they all reaccelerated their cloud revenue, right? And then Microsoft comes in and they decelerated. And I was like, oh God, don't drop the ball on us, Satya. Like when I saw that happen, I was not happy with it. I'm not a Microsoft shareholder anymore, just to disclose, but did
you sell after the earnings, or you just haven't?
No, I sold the other quarter. I sold the other quarter around where it actually closed, and I haven't bought in. Mostly because it was a premium valuation. I feel like a lot of its future growth has been priced into it, and also fundamentally, I didn't think that their products, especially Copilot, when it comes to Microsoft Copilot, I don't think that people were buying into it as much as they had expected, and even announced ahead of time how well it was doing. It's not doing as well as people expected. There aren't a lot of upgrades, like because when you have like Microsoft's biggest clients are all like Fortune 500 companies. It's a very sticky product. Microsoft Productivity Suite. Microsoft Office Copilot is an add-on that a lot of companies really aren't buying into or keeping or retaining those licenses. That's a problem. They're not offering value for people. But again, what you said with DeepSeek was that Microsoft, they've been closed source for as long as we can remember, right? This is starting to come to fruition where it's like, how many of these other companies have taken DeepSeek and offered it on their own platform? Did you see an announcement that Microsoft Azure was offering DeepSeek as one of the LLMs of their platform? I didn't see it. It's on Bedrock. It's on.
No, Microsoft's doing it.
Oh, it is? Okay. Well,
I mean, sorry. OpenAI is doing it, but it's through Microsoft.
Okay, yeah, through Microsoft. Yeah. Well, that's the thing. This is one of the reasons why I sold Microsoft about a couple of quarters ago, was because of the stipulation with OpenAI when it comes to AGI. What is the goal of all this? What's the goal of everything that all of these companies are building models and the AI race? The goal is to head toward artificial general intelligence, like the super AI that can literally teach AI what to do, like freaking Skynet. Like that's the goal. It's to build Skynet, right? And Microsoft has skin in the game with their stake in OpenAI right now, which is artificial intelligence, but it's said in there as part of the terms, once OpenAI unlocks AGI, Microsoft no longer has rights to the IP.
Mm-hmm.
What are they going to do? That's it. It doesn't mean they're out of the game, but they're going to sure as hell have to figure out something, right?
I also think this proves my initial thesis. OpenAI will never go public. It will never be a publicly traded company.
I agree.
It won't open the lid. It won't open the hood of what's actually happening. I don't think Sam would want that. It's also, unless if they solve AGI, they will. If they, but I think other people will solve it before them.
I think it also has a spinoff or something after that.
Yeah, but I just don't think it'll ever go public. But logical. What's your thoughts on Microsoft?
Yeah, I mean, it's an overvalued company. I always really liked the company, but it's just not much to really get excited about at the valuation that you're getting it at. It doesn't make a lot of sense. It's starting to look a lot more like Apple, but on more a little bit on software rather than the hardware side, I guess. But yeah, I mean, look, these are $3 trillion companies. You need to wow me. There needs to be something here for me to look forward to hold this. Like, there's just too much risk reward. I think the risk is skewed to the downside. So there's just better opportunities in the market. It's not a bad stock to own, but is there opportunity cost in owning something like Microsoft? I think so. Before we jump into a specific comment that was on the call about OpenAI, today they tried to raise money, $40 billion at a $340 billion valuation. I mean, weren't they just at like a 160, 170?
Yeah, they're less than 200.
Like yeah, less than 200 like a few months ago, 6 months ago. No. I think what happened is the DeepSeek came out, the Quen model by Baba. They're getting crushed by Llama, Facebook's 700 million MAUs. And they're like, I think they're seeing the writing on the wall and they're getting aggressive. I mean, now's the time for the AI race. But look, you spent all that money, you did all those things, and you're trying to raise money before maybe the trade is over. And that's kind of the point I want to lead into next, which is talking about the comment that Satya said on the call, which is 2026 is going to be a higher CapEx spend year than 2025, but it's going to be lower growth than 2025 is, right? Because the numbers are getting so big. And I think that's personally why I typically avoid mega cap companies, super large cap companies. That's why I stick to small caps, because the law of large numbers is going to get you sooner or later. That doesn't mean that you're not going to see impressive growth until then, but at some point you're going to hit a plateau. And the thing is, it's not so much about Microsoft stopping or slowing their level of spending. If anything, that's probably bullish for Microsoft, because we still have yet to see that ROI that Shai was mentioning. It's more like the chain effects that it has in the ecosystem. And look, they're still going to spend more in 2026 than they are in 2025. But the problem with a lot of these names that are in the data center infrastructure build out is that they're cyclical in the sense that we have CapEx cycles. And once the CapEx cycle starts to show signs of, hey, here's the end point of the cycle, markets are going to start to look forward. And so what happens to a lot of these names that began trading off of forward multiples? Now we weren't sure, because the AI infrastructure investment trade could have gone on for another 5-10 years. But Satya came out and said, no, 2026 is basically, it's going to be nearing the peak of what we think we're going to start spending. I'm not saying 2027 can't grow from there, but obviously the growth rates are going to start getting lower. So you think about, they did $75 billion of CapEx spend in 2024. In 2025, what are they going to do? $100 billion? Okay, that's $25 billion more. $100 billion is a lot of money, but that's 33% growth in CapEx. In 2024, they had 80% growth in CapEx. So just thinking about going from 80% growth to 30% growth to what's 2026 going to be? It's going to be lower than 30%. So is it going to be 15%, 10, 20, right? Well, he said it's going to be lower than the growth is going to be lower, right? So I'm just making up numbers.
Did he say fiscal year, or did he say calendar year? Because that's going to matter.
Oh, I'm not sure.
He said it by quarter. So by quarter, okay. So it doesn't matter the fiscal. I think it's like Q2, Q3, Q4. He was saying.
Yeah. Again, I'm just trying to make a general point based off his very high level comment, which is that growth will slow in the infrastructure spending CapEx, which again is fine for the mega caps. Them spending less is bullish for them, especially when they have not been able to show ROI. What happened in 2022 when you know, Meta's down 70% because they're over investing in the metaverse $10 billion. And then we had the year of efficiency where they pull back that CapEx spend where they're not able to show ROI. Stock is up 5-6x from there, right? It's not just because of that. You had ad market rebounding. That's a cyclical industry as well. But the point is that like once these guys become a little bit tighter, then on their spending, then their operating expenses go down, their profitability goes up. And now the stock all of a sudden looks a lot cheaper. But the growth is obviously going to tank. But again, they didn't really have a lot of growth to show for that CapEx to begin with. Again, the point, though, that I'm going to make is not about the tailwind that is for Microsoft or other Mag 7 that's going to end up cutting back their spend. It's more like all these second order beneficiaries from this AI infrastructure build out that are going to start seeing, multiples re-rate, in my view, because it does, like, again, these are very cyclical companies. People are like, oh, NVIDIA's at 27 times earnings. It's cheap. It's like, well, that's the thing about cyclicals. We had a whole talk about this on ad tech last time. Does the numbers on Magnite look good? That's what we were talking about. It's like, well, that's the thing. I don't want to buy this thing when it looks good. I want to buy this thing when it looks expensive because I know that their profits are going to end up moving forward. They're going to be a lot better. So that PE is going to actually shrink over time. So right now, what you're going to have is a lot of these guys who have low PEs because those earnings are inflated. What happens whenever they stop growing at the 70%, blistering speeds that they've been seeing? They start growing at 15% in line with what Microsoft is basically guiding for their CapEx or whatever it ends up being for 2026. And again, markets look forward. Today we're in 2025. We're already going to start trading on 2026 multiples. So by the time we get to 2026, we're trading on 2027 multiples. People are like, well, hold on. Their CapEx is still going to grow in 2026. It's not like they're showing negative growth. Yeah, but that's not how cyclicals work. Cyclicals are, by the time they show negative growth, the stocks are down 50%. That's my point, is that market looks forward. They already start pricing those things in. And, I wouldn't be surprised if a lot of these AI infrastructure players have already seen the top. I'm not saying there will continue to be winners. Again, the spend is going to be reallocated from these players to those players. But I think the AI trade is over for many of these infrastructure players.
So I want to go back to the original analogy we said earlier on the call. A car, the road, point A, point B. Essentially, DeepSeek was the Waze versus the Google Maps, which were traditional routes. I think all these big tech companies, they were just like, let's just get in the car. Let's get from point A to point B. Let's not worry about getting there as quickly as possible, as efficiently as possible. Just get in the car and just make sure we're going on that pathway. So they did not care about getting their spending patterns for CapEx. They just did not care. DeepSeek, once the Waze app got created, oh, whoa, we can actually get there really efficiently. We don't have to waste time. There's a clear pathway towards point A to point B that doesn't require us to sit in traffic for hours or spend as much billions of dollars. We can be optimization now is a real thing now. I think that alone from DeepSeek, I don't know if it's going to reflect that in CapEx. I think the dialogue in the board meetings, I've been in those board meetings, whenever something as crazy as DeepSeek got revealed, there's going to be sensitivity analysis be made in corporate strategy. They're going to ask their team leads, hypothetically, if this is true, do a scenario analysis. Tell me what's the implications of that. Those scenario analysis is going to start making them think ROI. And that's a new world we're in now. For the post DeepSeek world, that conversation is now is taking place. That wasn't the case.
This is
before.
good for AI.
It's great. It's great.
Innovation. This is great for business. This is great for capitalism. This is exactly how it should be done.
Yeah, it just
might not be good for your holdings.
It's not. It's just not good. It's not good for equipment.
Terrible.
It's just not good for equipment manufacturers, or it's not data center like those boxes in data centers, or data centers. I think data centers, all those little niches within it, like the SMCIs, TSSIs, Dells, HPs, etc. That's not good, especially in the low margin business.
You heard about what happened to HP, right?
No,
what happened to
HP? The Juniper acquisition got blocked.
Why would they reject that deal?
Yeah, no, but that was their way to spread into the software vertical.
Yeah,
right? I mean, they're already in there, but by buying Juniper, the software developers platform.
But no,
I don't know about HP anymore.
Isn't that really funny that we thought after Lena Khan leaves that those deals are just going to go through immediately.
Like psych.
Okay, yeah, didn't think so.
Gotcha.
Trump's America. Let's go.
Yeah.
But there is actually for semiconductors, there is real concern on specific segments of it. Like
specific ones.
It's not all yeah, it's not all semis, guys.
People like misunderstand me when I say like, oh, that's it. Tech is dead, or you know what I mean? But it's more like a big portion of tech is they might have seen their glory days already. I mean, look, a lot of these stocks were up 700%. I mean, go look up. And I'm not saying VRT isn't a good hold. Vertiv Holdings, I mean, they do the cooling for servers, whatever. Like they might end up being a winner. Like I'm just using them as an example. That stock is up 700%.
Yeah.
Like, is it unbelievable to wonder if
they're going to be a loser? I'll say it. I'm telling you, like they're going to be not a loser. They're going to be dead for years until the next leg.
And look,
they're a SPAC
too,
so that doesn't help.
People who thought that, again, how many times we do the stocks on spaces and stuff, and like sometimes I bring up like, yo, I understand the AI trade is secular, but every time that people think like chips or whatever cycle trade is going to become secular, that's immediately when I have my eyes wide open and I'm thinking it's different this time, isn't it? And it just never is, right? Like there's always going to be cycles. That's all I'm saying. CapEx cycles, business cycles.
Yeah. People confuse how much training demand is correlated with the semiconductor ecosystem. That's a little bit like inference demand is going to be sky up to the right, and that's why Broadcom, Marvell, Astera Labs, they're going to do great. Like that's okay in semiconductor chain. NVIDIA, their CUDA platform cemented themselves into permanence for AI. They're going to be just fine, everyone. TSM, they're the only foundry. They're still the only foundry. When you have a monopoly like that you just need their wafers, like they're going to be fine. But the equipment manufacturing ones, like the LRCXs, AMATs, KLAC potentially, like these expensive niches within making these like chips more these chips were so expensive before, and you're okay at spending as much dollars as possible for these equipment manufacturing companies. Those days are over, I believe. So that's why it's going to be an S curve. I think we hit that middle of that S, and I don't know how range bounding it's going to be. I don't know if AGI is going to be the next leg of their growth. I don't know what next frontier is going to cause that next leg of growth. I just think the baton got transferred officially from stage 1, GPU servers, hardware, to stage 2 of AI, software applications. That's where you want to be.
Yeah. I don't think we're in stage 2 yet. I think we're kind of transitioning into it. Like, because I kind of have like an overlay. So you have 2023 was the time of the GPUs. And then you have 2024 was the time of like data center, all the components that are involved in the entire AI infrastructure. And then 2025, I think, is going to be mostly centered around software. I think these companies are going to do great. I mean, especially NVIDIA. Like, you know, we've talked about many times with NVIDIA. They have the CUDA platform that's built to basically orchestrate all the NVIDIA products all together, and you're able to make it more efficient with having all the libraries and all the files and everything that developers can use and so on. Like it's going to be very sticky at that point. Like a company can't just switch out of NVIDIA and let alone like not buy NVIDIA products. Like companies are always going to want the best. Like they're always going to want the best, but the demand for having the best across the entire board is the one that gets a little bit difficult. So in IT, you know, when you think of infrastructure, there's a term called scaling up and there's a term called scaling out. When you scale up, it means that you're improving the server performance, increasing the CPU and whatever, like you're making your system more powerful. When you scale out, that means you're increasing the number of servers that you have, or in this case, the number of data centers, right? It was scale out to infinitum for the last year, right? It's like, we got to build data centers in Southeast Asia. We got to build data centers in Arizona. We got to build data centers everywhere, right? And then now the question is, do we need to build this many data centers if we're not as constrained to compute anymore? Maybe we need to scale up the data centers and not just the GPU themselves, but the network connectivity between each one of these components. Like if you take, for example, the amount of processing power that a GPU has, it's like multiple the amount of times that data can be transmitted between different GPU clusters.
But Sam, real quick, if we're no longer scaling out, that means that you no longer need as many NVIDIA GPUs, right? So is the hyper growth phase over? And I would argue probably yes.
I would say that NVIDIA is always going to be fine. But now if you think of like, is NVIDIA going to be a 10-bagger from here? Probably not.
Yeah, like
is their growth going to slow down? Well, it's already priced. Their slowdown in growth is already priced into that stock, right? And the market's going to figure this out way sooner than we're going to see in the stock price. However, at the same time, the demand will still be there, but it's not going to have enough pricing power to inflate the price of a card to all of these clients and make like 80% gross margins for a hardware company. That's very difficult to sustain. I'm not saying that it won't happen, and I have no freaking clue, dude. All I could say is that I agree with you. I don't think the days are numbered for a lot of these hardware, especially the ones centered around GPU companies, but I don't think that edge and inflow in terms of investing is still going to be there as much as it had been before DeepSeek. The post-DeepSeek world is, I don't know what it's going to be, but I think it's going to be software, and I think winners like in the network card segment, especially with Broadcom, Astera Labs, MRVL, and a few other companies, I think they're going to do fine. In fact, I actually think ASML is going to do fine because they have a lot of China exposure, and we haven't seen that AI spending boom happen in China yet. And when that happens, a lot of these companies are going to catch a tailwind, including Apple. Apple, even though the revenue came down in China and they missed on China, that doesn't mean that it can't come back and the market's trying to get ahead of it. I'm just saying that there was a little bit of underestimation as far as diversifying where all the revenue verticals are coming from around the entire world. And that might be a tailwind for a lot of these companies that have a lot of China exposure. So we'll see what happens.
I think what's really interesting too, sorry, last point, just because we're talking about NVIDIA, that thing is barely getting saved at the 200-day. I don't know if you guys have been watching that price action, but it's like wicking below and just stick save at the end of the day. We'll see if that holds. The chart doesn't give me a lot of confidence. Could bounce from here, who knows? But I think what I was trying to get earlier is like the hyper growth phase. We talk about the S curve. I mean, NVIDIA was up 10x plus in 2 years. That phase is over. Maybe you get compounder like returns from here, or this company has 55% net profit margins. Perhaps you get DeepSeek tomorrow, you get a GPU on the market the next day. Who knows? You just have a lot of risk at this point because they could not be the only person on this on the in the market. We could get competitors. It could erode those margins. It's possible, right? They're very well ahead of people, but we thought that about OpenAI. I'm just saying things can happen any day. One last thought about that is NVIDIA SPY is actually outperforming NVIDIA year to date, which is great to see. I'm sure it's outperforming Apple, which is telling me that we used to need Apple to go up to save the market. We used to need NVIDIA to go up to save the market. Today, the RSP, the equal weighted S&P 500, was actually up more than the market cap weighted SPY. You saw a lot of rotation in my view. I think we're going to continue to see rotation in this market.
Yeah,
and it's really healthy.
Not just US equities.
Yeah, we should do we should talk more about rotation. Yeah. I got new position in Europe today exposure. I've been doing that Colombian bank. We're not going to get into that today, but I do think ex-US equities do look very favorable. You've been talking about emerging markets, so we'll leave that for another podcast episode.
Definitely.
So we're at the hour, guys. This is episode 3. Before calling out, I think it's really important. We're in the heart of earnings. First off, before I finish on NVIDIA, I think their next leg of growth, I do agree with you, logical. It's going to be a compounded, but when quantum happens, their CUDA Q platform is going to be a cornerstone of quantum computing. You're going to be able to simulate a lot of the quantum algorithms on their GPUs before having to deploy them on the physical QPUs. That's going to be huge for quantum. So whenever quantum is ready to take off, it could be 5-10 years. NVIDIA is going to benefit substantially from that because of CUDA. But regarding earnings, like we're in the heart of earnings season, and guess what? Monday's coming on strong. We got Palantir after the bell on Monday. We got PayPal pre-market on Tuesday with Spotify pre-market Tuesday. We got Google AMD Tuesday afternoon. Then wait.
I thought Monday was Amazon, right?
No, Amazon is Thursday along with Cloudflare.
Oh, so they were on Thursday. Okay.
Yeah, they would never report on Monday.
I thought they were. I saw the chart.
Uber is reporting Wednesday morning. That's, in my opinion, a bounce back candidate because a lot of their pullback is narrative driven. That's not going to happen for years in the cyber cap. So I think they're a lot of FUD in that name, low expectations. Then we also have Qualcomm, ARM on Wednesday afternoon. ARM is one of the names I've been wanting exposure in. Haven't gotten that dip.
Seriously.
But who knows? SoftBank needs to find cash to get into Stargate and all these like OpenAI investments. They own 90% of ARM. So like they have no cash right now. Like they have a negative cash balance. How will they get
slowly
that?
Dilute over time.
Exactly. So and that's what ARM's.
Yeah,
ARM might struggle. But either way, Appreciate you guys hopping on for the 3rd episode. Tune in next week. It's going to be another volatile week.
Let me do a little bit of a shout out though to our sponsor again before we head out. We got OspreyFunds.io. They have 2 different trusts available: Solana, OSOL, and OBNB. Make sure you guys do your own research, explore the options on the website, check out the prospectus and everything. Appreciate you guys coming on here. Great chat with you all. Check out our next episode coming out every single week on Saturday morning. Thanks, everyone.